Well, it's interesting you mentioned in terms of those challenges, especially of expenses increasing, right? I don't do a lot of work in the commercial space, but recently I've started to help specifically one client look for commercial leases, and they're also looking to buy places. And like while I'm going through this process with them, I'm like trying to learn as much as possible. Is there an opportunity here to own commercial real estate versus the residential? And definitely it comes with its own challenges of like long vacancies, more down payments, all of that, right? But it's seeing the triple net lease where it's specifically a lease where the tenant pays their rent and they pay everything else.
The taxes, the maintenance, the utilities, and any upgrades that they want to do, etc.
Yeah, exactly. And in these cases, it's interesting. This specific client is budgeting like $500,000 to build out their business each time they rent a space. So looking at it from an investment point of view, if I owned a property and my tenant was sinking that much capital into like making this space work for them, signing a 10-year lease, it definitely intrigues me just to see, is there somewhere, definitely it's not for a new investor, but maybe if you get a good few properties, you build some equity and you want to roll it over. I'm still in the research phase. I'm not recommending it to anyone, but I'm still trying to just learn as much as possible through the process to see, is there an opportunity there, in the future to own a few commercial buildings? And if you have a 10-year lease, you figure out a way to reduce that vacancy. That's the biggest part, to have that, like a good tenant lined up, right? Because if you imagine, there are people, I look in Welland, right? Just driving around, there are these small commercial properties that are just a box, and a national bank or a BMO or a TD has their branch. If you could have a tenant of a bank who's like going to stay there for the next 20, 30, 40 years, taking care of everything, like, I don't know, it intrigues me, right?
It definitely makes commercial real estate, especially in times like this, once this, COVID stuff is all over, quite intriguing. And it's funny that you mentioned it, because I was actually thinking, like, with all the rent freezes and all the different things that they're doing, it may not be a great time today, but at some point there is going to be a new level of normalcy, right? Mm-hmm. And at some point people are still going to want to go out and do things. I think there's going to be an opportunity to potentially buy at a good price if a lot of things become vacant. But again, it has, in my opinion, also more risk associated with it. Absolutely. However, I agree with you. Like, it's, you're not stuck with the LTB, you're not stuck with the Residential Tenancies Act or the whole landlord tenant board stuff. It's a business. And so I was I'm still looking at storage units. I'm still looking at different things like that where, our hands aren't as tied as being a residential landlord. Now, that's not to say I'm not going to continue buying residential. I think that there's always a great spot for that. But it's not a horrible idea to diversify, a little bit into other asset classes in real estate as well.
Yeah, this is almost one of the things that I've always done in the past during my investing. It's like, I'll have, my bread and butter, something I'm focusing on. But when someone speaks to me about an opportunity or they mention something, I'll dig into it. I'll research it, right? Like I focus on the Niagara region, but when someone speaks to me, look at this area, this type of property, I don't like to deviate too much, but I'll still look into it and I'll see, hey, is there an opportunity there? Is there something that I don't know that may change the way I look at things, right? So that's the same way I looked at this earlier in the journey. So I own 3 condo units of student rentals in Mississauga, near the University of Toronto, Mississauga. When I got started, everyone was telling me, hey, you can't buy anything in Mississauga. It's too expensive, right? Because it was really expensive. Nothing cash flows in Mississauga. Those properties actually had $700 condo fees when I bought it. So like all the red flags were going off. It had fraud happen in that building, right? And every unit owner was paying these special assessments. All these red flags were there. But then I looked at it. These were 5-6 bedroom, like stacked condominium townhouses that was on a direct bus route to UTM, right? University of Toronto in Mississauga. I'm like, wait a second, if people in McMaster are renting out their rooms at that time, maybe for $500 a room, can't I do the same thing and then deduct my condo fee, deduct that special assessment, deduct all my expenses? Is there still some cash flow? And those properties now, from an equity standpoint, have done like so well. Just city of Mississauga, right? It's a ridiculous place to invest. But even from a cash flow standpoint, they were like north of $1,000 in cash flow almost from day one. That experience has taught me that, you know what, follow the beaten path to a certain degree. If people are, making money in duplex conversions, if you replicate what they do, you will likely succeed. But at the same time, what I learned from that experience with the student rentals is, be open to looking at ideas that may not be conventional.
Mm-hmm.
And do your due diligence, right? Go through the process, run your numbers, look at what the potential rents are, because maybe that's an opportunity that no one else is looking at, and it worked out in that case, right? So looking back, had I just like dropped everything, just done one thing and replicated it, I may actually be further ahead, right? So I've done the conversion. I bought this four unit building to do a BRRRR, right? To buy out the leases, do all that. My duplex, I furnished it and tried to Airbnb it for 2 years. And so I've just gone all over the map. And even those first single family rentals, I started with trying to do the rent to own and then switch back to the single family rentals, right? So it was a good learning experience to try all these different things. But now I'm at this point where it's like, okay, the duplex conversion works. I'm just going to do that for the next, call it 10 properties I buy. And I'm not going to rush it. Just let it happen naturally. And once I've built that base, then if I don't want to keep doing that anymore, I'll look elsewhere. But like almost to cut out the noise so that I can actually really dive into the one strategy and figure it out, right? Because in a duplex conversion, you got to have the right contractors. You have to have a good designer. You have to have the right team in place, right? And you need to know which city to invest. So all these different factors that come in, I feel I finally figured it out. So instead of now figuring out something else, let me just implement it and just grow that, right? So
yeah, absolutely. Really well said. I'm really enjoying our conversation, but the next part of the podcast is our lightning round. So I'm going to ask you a series of 5 questions. You're going to give me the first answer that comes to mind. Are you ready?
Okay.
All right. Number 1, what is your favorite real estate investing book ever?
Rich Dad Poor Dad. It was the first one I read, and it's a classic, right? Most investors start with that. So yeah.
For sure. Number 2, if you are a podcast listener, which one do you listen to the most or is your favorite?
So recently I've been listening to The Rational Reminder. It's actually it's a podcast about investing run by financial planners, but they don't like real estate investing, which is the most fascinating thing. However, I find that they're highly intelligent and they understand investments. So I'm so curious to hear what is their take on it and their perspective on it. So I've been fascinated because their views are contradictory to mine, but it's interesting to hear what their perspective is. So I've been digging into that.
Yeah, that would be interesting. Now, the only thing I would just say with financial planners is it depends how they get paid, right? Because if they get paid fee like upfront, then they're likely going to give you the best advice. And I can go in a whole soapbox discussion on this.
Absolutely.
But, and I was a financial advisor for 3 months and I just didn't want to do it because it wasn't the right way, I think, to educate people. That's just my opinion. Please don't kill me, people. But, at the end of the day, a lot of them make commission by selling mutual funds and segregated funds and all that stuff. And in order for them to keep making a paycheck, they need to push you into these things. So if you're going to hire a financial advisor, financial planner, just make sure that they're fee only. So I would go back and I haven't heard the podcast. I'm sure it's great for the opinions, but always be careful where somebody's coming from what viewpoints and what is it in it for them as well, right? So anyways,
that's absolutely.
All right, number 3, what is your favorite pastime? What do you do for fun when it's not work or real estate? So
recently I've been in a bit of a grind where I'm putting in like 12-hour days, but yeah, I love ice skating. I was a huge fan of ice skating when I was a kid, and it's something that it really relaxes me when I'm on the ice. I played hockey for a bit. I was never really any good at it, but just plain old ice skating, going around the rink, it's something that I love.
Awesome. Very cool. Number 4, if you lost all of your money and assets tomorrow, how would you start again?
I don't know if I'd build it the same way. I'd probably start a business, just reinvest into that business until it produced like enough for me to live off of. Real estate would be in the equation as well, right? Real estate investing is a big part. That's an interesting question. So if I lost everything, except I assume my knowledge, right? Just like what I've learned.
Yeah.
I'd probably start from a pure financial standpoint at daycare. Daycares apparently make so much money, it's ridiculous. But that would actually be exciting. In a funny way, it's like some of the decisions that I have to make now are like almost calculated, right? Like I don't want to lose what I've built, so I can't like go all out into this something else, right? So to not have anything and to just be able to start from scratch, that idea actually excites me to the point that I wonder if I may actually try to do that in the future, where it's like, okay, just forget about everything I made. I've seen some shows about that actually, like these undercover billionaires, right? Like this guy goes to like a town, he like starts from scratch, like starts a brewery, I think. And I don't know, actually. I'd have to give it more thought to like know the step-by-step plan, but that idea actually really excites me in a funny way.
Interesting. So it may or may not be real estate. Okay, that's honest.
Yeah. I mean, I feel real estate is a great long-term wealth building. But if I had nothing, I think creating an income first would be more important in that place so that I could then take that and put it into real estate. Yeah, I'd probably start by working for free for other successful either investors or business owners and provide so much value that they start paying me because they don't want to lose me, and then either find a way to do it myself, or if they compensate me enough, continue to work for them. That would probably, yeah, working for free would be a big part of getting started. I find most people are not willing to do anything for free, when the reality is if you have no experience, no knowledge, and no money, it's probably the best way to get access to people otherwise you wouldn't be able to get access to, right? So to be completely upfront with you, right now with my realtor coach, right, who's been coaching me for the last 2 years, I'm now helping him build out his coaching business where he's having some group coaching sessions, and I'm helping him to co-lead some of those sessions, and I get paid nothing from it, but I get to learn from him how he coaches people. So it's almost like I'm learning a new skill of how to coach. And in that, I don't know if there's an amount of money I could have paid him to get that kind of training, specifically from him, right? Because I feel he's like a master at like digging deep into people and finding out what like gets them alive. So anyways, it's just an example, but working for free is something I highly recommend, especially if you're young. If you're young, you have no commitments and you need to get started, find someone that you feel like, you know, they're doing what you want to do, and just tell them, like, not forever, but for a month, for 2 months, right? Just, I'll work for free. Tell me anything you want me to do, and just teach me as much as you can during the process.
Okay. All right, cool. And last question, if somebody has $50,000 and they want to get started, how would you recommend they spend it?
I'd probably recommend to them what I did to buy the first property with my own capital that I bought with my brother, where it's, I think 50,000 now may not be enough to buy a property. There's not too many options, good options at 250,000 almost. So if you can qualify for something with a lower down payment, then I would start with that. If you can't, I would find someone like-minded, right? Maybe they also have the same amount, partner up, do a 50-50, get started. Specifically for me, like I mentioned, if I had 50,000 and nothing else, I would put that money into coaching to start with. Not all of it, but you know, a good chunk of it. And then find some sort of business or some service I could provide of value to others, where I could get paid for it, right, over time, and learn from a coach that could really guide me in the right direction, so that I can take that 50, make it into something more, and then now I have something substantial to invest. So that would be the route I would go.